Hey taxpayers, it's Tiffany Gonzalez CPA here, founder and CEO of Accounting to Scale, and today's video is a life hack. Like all life hacks, they don't necessarily work for everyone. So I'm gonna start the video by giving you a few disclaimers about this life hack. Disclaimer number one, this hack will only work if you are below the mileage that you were allotted in your lease. Disclaimer number two, this hack will only work if the vehicle is in decent condition. In other words, it doesn't have any major dings, dents, or car crashes in its record. And disclaimer number three, this will only work if your car decently holds its resale value. So here's how it works. You've leased a vehicle for 3 years, and you're now within a month or two of it finishing. You head over to the dealer for a dealer inspection, and they start listing all of the imperfection with your vehicles, from chipped paint to a small minor tear in the interior. They are incentivized to create a long list of minor damages on your vehicle. One, so they could charge you, or two, so they could say, hey, we'll waive it as long as you do a new lease with us, or we'll roll the cost into the new lease. So now this leased vehicle is costing you a whole lot more than you imagined, much more than the monthly payments you were making. Now let's get to the hack. The hack is selling your leased vehicle to a used car dealership. What? Let me break it down. Every lease has a buyout clause. That is how much money you need to pay the leasing company in order to own the vehicle. Your lease was based on and calculated as the depreciation of the vehicle. You see, the leasing company knows the value of the car. They figure you're going to have it for a certain amount of time. You're going to drive a certain number of miles. Therefore, this is your monthly payment. But what if you don't drive all those miles? Example, they've allotted you 10,000 miles per year, 30,000 miles for the full lease. You're getting ready to turn in your vehicle, but you've only driven 22,000 miles. What about those 8,000 miles you paid for, but weren't able to really use? Technically speaking, you overpaid for the depreciation of that vehicle. And now it's time to get that equity out of the vehicle by using this hack. Step one, call your finance company, the leasing company, and figure out what the buyout is, what the buyout clause is, what does it entail, what are all the fees you would need to pay to buy this vehicle from the leasing company. Step two, head over to a used car dealership. Think CarMax, but any used car dealership will work. Have CarMax now give you a quote for purchasing the vehicle. And if you have time, definitely shop around. The point I'm trying to make here is right now, used cars are in high demand. And so these used car dealerships are trying to give you a good price for your vehicle, especially if you've kept it in decent condition. The used car dealership understands that this is a vehicle that has been driving for a certain amount of time, but has low miles, which is lucrative to them to purchase. So now the used car dealership is essentially giving you an upper hand. Instead of having the leasing company start writing down all the dings, the used car dealership is trying to give you the best price. Okay, so you're saying, I get it, Tiffany. I'm gonna basically get back the money that I've paid to the leasing company for having paid for miles I didn't use. Cool, but what's the cherry on top? The cherry on top is sales tax. You see, when you called the leasing company for the buyout price, they quoted you the buyout price with sales tax because they assumed you are buying out the vehicle. You are the end user, you pay sales tax. But when a used car dealership buys the car directly from the leasing company, they use a resale certificate because essentially they're going to resell that car. So they don't pay sales tax, which means you get that much more equity out of your vehicle. Here's an example. You did a 3-year lease and you were allotted 10,000 miles per year, 30,000 miles for the entire lease. But you've only driven 22,000 miles and you have 1 month left on your lease. That's 8,000 miles that you paid for but didn't actually use. You call your leasing company and they give you a buyout of roughly $26,000. You head over to the used car dealership in your area and they quote you $28,000. That's a $2,000 difference in equity if this used car dealership purchases the car from your leasing company. So you tell the used car dealership, yes, let's do it. Except when they call for the buyout of your vehicle, suddenly the buyout isn't $26,000 anymore. It's less because the buyout you were quoted was with sales tax. Suddenly, the used car dealership is handing you a check much larger than $2,000. You walk out of there with a check in hand much larger than you thought you did, and now you're ready to pick out your next vehicle. Please remember that everyone's situation is different and every car is different. Since this life hack worked for me, I thought it was important to make this video to see if it might help others like you. If you have a financial term or topic you'd like us to discuss, please leave it in the comments below. We love your suggestions. Hit the like button and subscribe to our YouTube channel. Follow us on LinkedIn, Instagram, and Facebook at Accounting to Scale. Until the next video, your favorite CPA, Tiffany Gonzalez.